Hello everyone, welcome to a brand new series, a podcast series by MCQube. CommView, a commodity dialogue by MCQube. The intent is here very clear to make commodity a household name to investors and traders. And the intent is to make a well-informed commodity community. Today's guest with me is Mr. Ashish Kyal, who is an engineer and MBA and a certified market technician, CMT, which is a very top industry qualification in technical analysis. And I would say he is an author, written a book on technical analysis, which is being published by a London-based author, London-based publisher, and it is very well accepted by market practitioners. And he makes the theory of technical analysis easier to understand. He is having numerous broadcasts, he is holding regular classes over online, I would say online classes, and he also have trade mentorship program. You can join with him for having a longer term association with him to understand the market, I would say technical analysis. He is the authority of technical analysis in Indian capital market, I would say. Welcome Ashish to this show, and I would like to thank you for accepting our invitation to join this show. Let's hear from him. Ashish bhai, welcome to the newest podcast from MCQ, where we have just initiated to educate the masses about commodity market. And to start with, in technical analysis, we found none other than Ashish, who used to be a good friend of mine. Long time we have started the interaction, and now we are in a different phase, sitting across discussing about technical analysis and commodities.
Right.
Okay. The global environment continues to be shaped by geopolitical uncertainty,
Right.
volatility,
Right.
interest rate expectations, US dollar. In fact, it creates a lot of, I would say, if and but, and a lot of volatility in the market.
Right.
And how do you think it impacts to bullion, specifically gold and silver, in vis-a-vis, I would say, in relation to technical analysis?
So first of all, thanks for giving the opportunity to be speaking to you. After I think it's been many years, but it's an amazing initiative, and I've
I'd
been
say it's
here.
around 12, 14 years we are meeting.
Yes, absolutely, and it's an amazing initiative, and that too on something like commodities, which is going to be the name of the game for coming years together. I think the era of commodities has just started, and we can see the impact that it created over the period of past 3 months itself. So someone who is tracking whether equity markets from investment perspective, or he is looking for global markets, he needs to understand the movement of commodities and how these events are impacting the prices day in and day out. I call this period as the Trump era. So I label it as Trump era because this is driven a lot of so many wars in the past 1 year. We have not witnessed it over 2 decades. In just 1 year, the events have been so much. Whether you look at the Israel-Iran war, India-Pakistan, a lot of things have happened, and all of these geopolitical tension impacts the currency. It impacts the commodities. It impacts equity markets. Everything. Now there is a relationship between each of these asset classes are interlinked to one another in some way or the other. Having said that, what is very peculiar to the current situation is that earlier we used to look gold as a safe haven, and gold prices used to rally when there was any kind of uncertainty globally, and especially like events like war. This time, my observation, for the first time, I have observed that the war started and the gold price started correcting, resumed the downside journey. So gold actually topped out much earlier to the war, but then in January 2026, when in INR terms it was like 80,000 high,
Yes.
and silver was also crazily up, and both these bullions are down by nearly 50% and approximately 27% now. And despite of the war, there was expectation that the gold price should rally, bullion should go up, but that has not happened this time. And anyone who was betting on inflation, on depreciating currency, in INR, it has still managed to sustain because of the duty hike,
Yes.
import duty hike, which happened
Yes.
in May
Yes.
by 9%, and also because of rupee depreciation, which has gone to the lifetime low levels.
True.
So the gold fall in INR is less. But if you look at the outside INR in US dollar or across currency pairs, gold has corrected. So the event will result into volatility, but it does not decide the trend of a commodity, is what I would say.
Okay, so nice. A nice, I would say, elaboration looking
Yeah.
into technicals, into, interlinking into volatility. Fantastic.
Absolutely.
Yeah, Ashish. Gold, silver are influenced not only by domestic demand and supply, but also it is impacted by central bank buying and selling, and
Right.
also other geopolitical developments. In this context, how does this, application of technical analysis applies to, price forecasting, yeah, understanding the movement of gold and silver specifically?
Very well pointed out that gold, silver, especially, is used by central banks, by treasury for storing it as a value. A lot of things happen. If we look at it in a way, when the dollar demand was reducing, central banks started buying gold in big way, especially China and even India for that matter. So that results into creation of demand. But people forget about two sides of the equation. It's demand and supply, both sides. And in that context, very, very important thing one needs to observe and understand that gold is one essential commodity which is freely traded globally. And the news or events results into short-term volatility for these commodities, but eventually, as I said before, it doesn't change the trend. Now, how technical analysis plays a role in this, I'll explain very simply. Everything is driven by the demand supply equation, whether the gold is bought by the central banks or it bought by the retailers or it's bought for some reasons or the other. So that demand supply equation can be seen in the form of charts.
True, very
Now,
true. Yes.
chart is nothing but a pictorial representation of whatever we see where the price have been traded.
Yeah, I always think that it's the technical analysis always is a reflection of the market sentiments.
Absolutely, absolutely. So it reflects the sentiment, whether the sentiment is bullish, whether the sentiment is bearish. As I mentioned, that despite of the war, the gold price started correcting, and that's very, very strange kind of an
Yeah,
equation.
it's quite,
Yes. So it's also driven a lot by perception and social mood. So I would say social mood of the crowd. Social mood represents what they perceive is going to happen in the future is what drives the prices. And and when the central banks are buying gold or silver for that matter, it will result into increase in the demand. But at the same time, if it is being sold by retailers, that is offsetted to a lot of extent. Now, retailers might not influence the prices to that much extent, but globally, worldwide, if you look at it, they also form a very big chunk of the entire influencing the prices of the metals per se. So, the geopolitical tensions results into gaps. Simply put, if something happens, if Trump tweets something today which results into another kind of an uncertainty or volatility, we will see gap. That is temporary. Post that, the equation, the market stabilizes in the first 1 hour, where the demand supply again starts reflecting on the charts in terms of the trades that people are putting in and taking that. So technical analysis actually work a lot better on commodities, because if you look at gold prices, it follows simple price action methods of trend lines, channels. Prices goes and forms a low exactly there, reverses, it forms support at Fibonacci supports of 61.8%, and it's a natural progression in which every freely traded market moves, and that's what we can clearly see even in the bullion prices.
See, now investors, yeah, traders, I would say, are quite exposed to a lot of technical analytical tools. It gives a lot of indicators. It's kind of bombardment of knowledge, I would
Right,
say.
right.
And sometimes there are a lot of complex things are there, and there are some indicators which are quite simple. And investor traders are exposed to all of them. Some are quite free, available in internet.
Right.
And if you use them, say without knowing it, we get a lot of conflicting results.
Right.
How do you think it should be addressed by basically concentrating into bullion, I would say gold and silver. Yeah, I think it also applies to other commodities
Right,
also.
right.
If you can just highlight on that.
Sure. So essentially, the problem is people are looking at indicators. If I ask you one question, if you are going to buy gold, what do you buy actually? You buy the price.
Yeah.
You buy the price, and you also buy the time.
Yeah, where normal people go wrong in timing the market, I would
Right.
say.
It's actually said that everyone is told that you should never time the market. I expertise on timing the market. It is possible to time the market. There are
Yes.
certain cycles in the universe which functions, and even in commodities, especially on gold, those time cycles work. So you can time the market first. And I would suggest, instead of focusing on indicators, you should focus on two things which actually works: price and time.
Yeah.
Which no one is focusing on. If you focus on price, you can see patterns which are repeated. These patterns are formed because there is a clear distribution that happens, results into some kind of a pattern. Accumulation results into pattern. Sentiment does not change overnight in just 1 second.
True,
It
very
takes
true.
time. It takes time. So it is driven also by two emotions: greed and fear.
Yeah.
Those are the most common emotion which drives every prices. When the gold prices were going up, silver was going up crazily, there was a lot of greed, and everyone wanted to be a part of it, as it is going to double every other
Somebody
day.
says that greed is good.
Greed.
Somebody said that, right?
Greed is good, but getting out before it is gone is the key.
True, very
Because you
true.
can be greedy, but you lost 50% if you bought near the tops. So my focus to all the people who are trading into commodities or any asset is that focus on price
True, very
and
true.
time. Indicators are there for us to develop that conviction, that confidence. It is not indicator you are going to buy and sell. You don't go
Yeah.
back to your friend and say, oh, I bought RSI at 60, I sold RSI at 40. No, you say, I bought gold at this price and I sold gold at this price. Focus on price. Indicators, maybe one or two, pick up what suits your style of trading, what you are comfortable with.
Yes, I was just coming to that. It depends on your comfortability, how you understand that. indicator.
Absolutely. So it's also about risk. So someone says, I can bet everything on one trade. I said, if you are going to do that, and if that trade goes wrong, you are bankrupt. You cannot bet everything. So you have to do risk management, you have to do money management, and even if you are able to maintain 60-70% accuracy, you are through. If you make, when you're making, you make more. When you're losing, you lose less.
True, that's
the key. That's the key. Even 50% accuracy, you can still make if you're
yes,
making
you'll
more
make
and
money
losing
in the
less.
market if you're more than 50%, my friend.
Yeah, absolutely. So people don't understand these simple nuggets. They get into complex things, and you rightly pointed out, it's an era of AI where there is so much of information. What is true, what is false, we don't even know. Like a video of yours can come up tomorrow, and you will not recognize it's not me, it's an AI.
Yeah, that's
AI
quite,
avatar, right? We call it that way. So you have to be very careful. You need to understand those indicator in and out, but focus on price and time.
True. See, bullion prices are quite highly sensitive to geopolitical developments, international, I would say, somewhere what you initially said, development, warlike situation,
Right.
central bank decisions. Sometimes we are having around 180 countries, and out of that, every government has different view on gold, and they have different
Right.
policies. It
Right.
impacts a lot. Policy decisions and policy announcements also impacts a lot. Whereas, just like just extension of my previous question, which says that these are fundamental things, right?
Right.
It impacts
Right.
bullion prices,
Right.
and bullion prices are quite sensitive to it.
Right.
And we have technical analysis, and which is a reflection of, no doubt, it's a reflection of market sentiment, but it also plots the price and time in a graph and gives
Right.
you some indicator. So how do you think, whenever what you said, whenever I buy or I will take a decision to enter or exit into bullions,
Right.
how important is technical analysis? Is it technical analysis is more important, or fundamental, or it is both taken together, how do you think it should be?
So first of all, I don't want to debate fundamental is better or technical is better.
No, it's not like that.
It's
My question is not exactly that. My question is how you weigh in between.
Yeah,
Is it a balanced thing? Or sometimes in the situation like this, technical is more important. That you can just highlight.
Yeah, absolutely. So I would like to say everything that works, you can label it as fundamental or you can label it as technical. Doesn't matter. If I plot, if I talk about stock, if I plot a price to earning ratio on a chart, and find out the range of price to earning ratio of a stock on a chart, you call it fundamental or you call it technical.
Yes.
For me, making money is easy by looking at it, anything pictorially represented. When we were in school, we were asked to plot certain graphs, plot certain charts, and sometimes we used to have tables. When we looked at tables, making sense was like not able to do that. But when we looked at the graph and we used to look at the trend, it makes a lot more sense in understanding and grasping it. That is technical analysis. We are simply plotting and understanding what has happened. We are not looking at the reason why it happened. Maybe China bought, maybe India bought, maybe US sold. We are looking at how it impacted the price. And that impact of the price, we then have to decipher in terms of what is the trend.
I still remembering, learning technical analysis by plotting graphs in a graph paper. That's what I learned.
Absolutely. So I started way back in 2005, 6, when there was no many softwares. You just have to do it, write down on the paper, try to do a lot of things. And so it ingrained within me that when you're looking at these kind of plots, you are actually simply trying to understand what is the impact of a war on the price chart. What is the impact of central bank buying on a price chart? What is the impact of currency depreciation or appreciation on the price chart? And that is how I plot it. I see the rupee chart, I plot a gold chart and see what is the relationship.
True.
I look at the overall global markets, see how it's impacted the gold prices here. So that's how I do it. Now, it can be said that fundamentals plotted on the chart.
Yes, I also do believe in that. Whenever I used to train some of my colleagues, I mean, not train, I would say, grooming them to be a technical analyst. Yeah, I always say, base, it's not that I am, giving importance to fundamentals, but I would say the base, you should learn any asset class, you should understand fundamentals, then you plot it in a graph paper, which is a technical analysis, then you take a decision, kind of.
Right.
That's
Absolutely.
what exactly.
Fusion analysis.
Yes. And there is a school of thought, what you just said about, event analysis, timing and event analysis. A school of thought which always describes about how events impacts macro and micro variables.
Absolutely.
Fantastic. See, we have a short discussion about how technical analysis thinks, and bullions are quite price sensitive. And whenever a trader, investor, plan his investment, trading decision. How do you think risk management and what type of risk management principles, risk management fundamentals, I would not say fundamentals, risk management fundamental principles should be followed for an investor or trader when they were making a decision? Not only bullions, I would say, whenever any asset class, you can focus on bullions, but can be with any asset class. I do believe risk management is quite common in all other asset classes, right?
Absolutely. So see, risk management is the ultimate way of seeing things. So when people talk about trading or investments, I would say 30% of it is method, which are methods that use fundamental technicals, price action. There are many methods. 30% is trading psychology, which is very important. How are you perceiving it? What is your mindset? How are you taking it after 5 losing streaks, 10 losing streaks? How are you taking it after winning it 5 or 10 times? Important. That's very important. The other 35% is risk and money management. And the remaining 5% is luck.
That's what experience says. How you'll divide 30, 35 and 5%. That's what experience says. That's what exactly is the key to, a successful investment, successful trading.
So it's very crucial that you put it. It's like if you're preparing an halwa. If you don't put the right ingredients into it, you are not going to get the best of the taste. So if you want to
Yes.
become one of the finest or the best traders the world has seen, or an investor, you need to have the right ingredients
Yes, halwa
mixed together.
which is being distributed in finance
But
ministry
minister,
whenever
exactly.
they prepare a budget.
Exactly, that's
In a lighter way, please.
right, absolutely. So risk management plays a very vital role. There is very important need to change the mindset that gold cannot correct. We believe gold prices are never going to go down. The past 3 months of price movement has shown silver correcting by 55%, gold correcting by 27%. That itself shows they
That's
can
why the
correct.
timing is. I am always an advocate of eternal bull run is there in gold. That's right. It is always eternally bullish, but there are times when
When
it
it corrects,
corrects. That's what
exactly.
exactly the
Right,
key to
and also if
successful
you check, I
investment.
think from the period from 1990s till I forgetting the exact period, but 1990s till 2005, for 15 years, gold corrected, and in
Yes.
that period, equity flourished. So if you were invested in gold, you lost nearly 30% in 15 years, and look at the opportunity loss that you might have.
Yes.
So I would suggest change the mindset. Nothing can go down, because when I was with Lehman, I was told it cannot go down. Lehman Brothers in 2008 financial crisis
Yes.
went bankrupt. I realized everything can collapse with a blink of an eye. So is what we saw, the sharp sell-off in silver that happened in March, in January, I think, was so fast, so rapid. Within 2 days, 25-30% was taken out just like that.
Yeah, that was the bloodshed day.
Bloodshed. So you have to have risk management somewhere in this entire process, because if you do not risk manage, you will give away everything that you made, or maybe you give away a lot of profits, making just minuscule returns.
Now it's always being said that avoiding your losses will make you profitable rather than looking for profits in the market.
Absolutely.
Yeah,
Absolutely.
That was a very wonderful discussion, Ashish bhai, and it's quite pleasure. I would say it's exciting to start this with you,
Absolutely.
and we'll connect and have more of this going further.
Thank you. Pleasure is all
Thank
mine.
you.
Thank you very much.
Thank you.